you to be the most successful as possible. So when I give you an alert and it says start at 275 on a spread that's $5 apart, that means it will be better for you than a one-to-one trade. But if you start at 275 and you're not filled, then you might want to adjust your price to 270, 265, 260, but no lower than one-to-one ratio, $2.50. Here's Snap today with a monster move up 25%, and it shows in the charts coming into this nice support and resistance area. So we did sell the news alert, and with the alerts, we're going to start putting in where we think the double down price would be if price kept going higher. So that way, properly analyze. Do you want to get in here, or do you want to wait a little longer till it gets up here? Choice is up to you. Obviously, up here would be a higher probability of profit. It'll also be a waiting game, and less trades will be filled. But back to where we are right now. So with sell the news alerts, it's kind of a trading zone. And why is that? Because we have patterns like head and shoulders that'll take time for this zone to fill before reversing in the direction we want. Now, obviously, you could just put a limit order in. You can even be a little bit more conservative of about 5% higher than where the price is right now by raising your break even, which is this number here. And we see right now selling the 75 calls and buying the 85 calls gives us a credit of $2.47, which is almost a one-to-one risk to reward factor. So if we raise that up to $2.75, we see that our cost is $2,250. Our max profit is $2,750, giving us better than a one-to-one risk to reward. This could be considered greedy, but let's make sure our investments are good ones. The indicator of what's going to change to make this price be filled of $2.75 from $2.47 is obviously price, which means as price goes up, our odds of them filling a higher break-even point for us is more likely. One way to think about it, though, is go to a lower time frame so you can see the back and forth movement of the candlesticks. We can see that price fell off a little bit from this high and currently is pushing back up. But is that creating a little bit of resistance? Meaning that price won't go high enough to get us into that 275 area. One way to consider is draw a line across the bottoms of support, and if price breaks support, then lower the price from 275 down to 265 and see if it fills you there. Or if you're using the Hike and Ashley like me, you can just follow the bottom of the candlestick this way and wait for price to drop and do the same thing. Depending on what time frame you use, you'll start to see the other indicators like sequence counter or impulse candles changing color. Just remember, the lower you go than the halfway mark takes away from your odds. So when you're placing your option order, always go to the right of the midpoint if you can. Never enter in on the NAT, because remember, we're wanting price to go to 0-0. We're collecting 250, red means sell, and we're buying it back at a lower strike price. Green means buy back. So the lower it goes towards 0-0, the more money that we make. The higher we can get it from a one-to-one factor, the more money we make.